Our intention is to provide the market with an improved analytical tool that is useful for tracking the housing sector based on both qualitative and quantitative characteristics that underpin the movement of prices. The KBA Housing Price Index has garnered traction, and the tool has drawn significant interest, both locally and internationally. This is a reflection of the market's need for a robust instrument for assessing house price movements. The real estate and construction sector has come under focus, especially over the last few years, as one of the core economic sectors recording positive growth.
The index moved from 104.99 on a quarter-to-quarter basis to about 105.1 during the second quarter. That tends to indicate that the housing prices are somewhat moving towards an element of stabilization, because a 0.2% increase is not significantly different from where the prices were the previous quarter. And that can be traced to the overall economic performance that we've seen quarter-to-quarter basis and even on an annual basis. With the anticipated tightening of policy, I think the households are more or less adjusting their expectations so far as their financing of home ownership is concerned, and therefore influencing the price movements. So essentially, the marginal increase that we've seen in prices can be traced to this demand and supply dynamics, with the demand indicating to be softening at a time when supply is increasing, as you can see the level of developments in the market. When it comes to the various subcomponents of the index, and one addition that we've made to this index that was not there the previous quarter is that we have what you can call sub-regional indices or clusters of houses. We are seeing an element of movements in houses being pronounced more in the middle income segment, where we are talking about houses that are ranging between 10 million to 20 million, and to a less extent, houses that are costing more than 25 million. Therefore, meaning that we are seeing less activity on the low end of the market. And this is a manifestation of the market being skewed towards the middle to the upper end. And that does not speak of the fact that developments are not happening on the lower end. Development in housing is happening across the board. It's only that the developments on the lower end are perhaps more for rental, while those that are coming to the market are increasingly in the middle to the upper end. So the message from this quarter's index is that we are seeing a sense of stabilization in prices, because the index has moved only marginally. But we are seeing more movements in the middle segment and to some extent in the upper segment, and not much movement of prices on the lower end of the market.